everyone, we are here at XPRIMM Time for Business with a special guest today. I'm talking about Mr. Thomas Johansmeyer, Assistant Vice President, PCS Strategy and Development, VERISK Insurance Solutions. Welcome.
Thank you kindly.
We're very happy to have you here. We gathered here today for the 13th edition of ICAR, our forum dedicated to natural catastrophes. From VERISK's experience, is there any visible change in the pattern of NatCat events in the areas you monitor?
Now, NatCat's really specific by geography, and we, of course, cover three regions, the United States, Canada, and Turkey. So to take Turkey first, NatCat's quite infrequent, but the severity is high, and we just launched, so there's nothing to observe as of yet. Although we did designate our first two man-made events in Turkey a few weeks ago. We've seen a bit of an increase in Canada recently, and in the United States there has been an increase in NatCat activity in certain parts of the country. So overall, we have an increase, but it's mostly due to convective weather. So tornado, hail, severe thunderstorm. That's where the increase in frequency has been coming from. And on top of that, there's been some increase in severity from those types of events as well, especially this year.
So have all these led to large catastrophe losses? Have they become more frequent in the last decade?
There has been an increase in frequency in the past decade, although it is lumpy. So you don't necessarily see, a steady increase over time. There can be little dips in there.
But now,
overall, we've seen an increase. Now, in terms of severity, we prefer to see things as severity by peril rather than severity on the whole, because a massive earthquake or an extremely large hurricane that makes landfall can lead to very, very significant insured losses. And we haven't seen anything of that sort since Superstorm Sandy in 2012. On the other hand, there have been some very significant severe thunderstorm hail events this year that have led to more than $1 billion for each of some of these events in industry-wide insured losses. So to see several large hail events in the same year of that magnitude is a bit unusual for us.
And it's also a sign for what's going to come, or?
Well, PCS is retrospective rather than predictive.
Okay.
So we don't know what's to come, but we do keep a close eye on these trends so that we can manage our own work appropriately and make sure that should frequency increase, should severity increase, we're ready to look for the signs that can help us manage, analyze, and estimate those events more effectively.
Is there a difference in the approach regarding the use of data by insurance and reinsurance from the US and other parts of the world? I'm sure you know a lot about the European area as well.
So it varies, of course. Now, what's interesting is that more and more worldwide, the use of data and analytics is seen as a competitive advantage. So the more data you can get, the more relevant data you can get. Your ability to sift through the noise, find the right information, build the appropriate models, and then apply that to your book, that's huge. The better you do that, the more likely you are to succeed. And that's become increasingly important in today's market because there's abundant capacity, rates are coming down, it's getting harder to hit the target returns on equity that insurers and reinsurers sought 7, 8, 10 years ago. So you have to get better at what you do in order to hit the targets you once attained. But even getting better at what you do isn't going to be enough. You still have to get better at new things, identify new risks, bring original risk to market, because that's where the real significant growth will come from, rather than the incremental growth, which has really gotten down to trying to shave fractions of a basis point out of a single transaction.
So one could say that the companies got more analytic, to say so, pay more attention to these details more than they did before?
There's certainly an increasing trend toward more robust analytics, increased use of analytics, and a greater dedication to analytical capabilities. And it's not, I wouldn't say it's a case where companies are discovering them where they hadn't before. I think it's been an evolutionary process where
maybe a shift of priorities, or?
More a case of past investments paying off and triggering current investments that'll pay off in the future as well. Now, analytical capabilities have been around for a bit, but they've gotten better over time. And insurance and reinsurance companies have gotten better at using them over time. So as with anything, the more we practice, the better we get.
That being the context, how do reinsurers and insurers benefit from PCS services?
There are a number of ways. So at the most foundational level, at the time of a claim, or during a catastrophe, an insurer and reinsurer can use our industry loss estimates for a variety of benchmarking capabilities. So if you're a primary insurer, you may want to benchmark your average claim payment to the industry. Now, this lets you know is maybe you're in too high, maybe you're in too low. Now, if you're in too low, you might think that's good, but people in catastrophe-affected areas talk, and if I find out that I'm not getting compensated for similar damage to the extent that you are, I may go to another company. And new customer acquisition costs have gotten quite high, especially in mature markets. So that's a scary thought. You want to keep an eye to make sure you're paying the claim sufficiently. If you're overpaying significantly, that could mean any number of things, and it'll get the catastrophe coordinators to take a look at their operations and their training to see what could be leading to a disproportionately high payment. Now, maybe it's justified, or maybe there's a training issue. Maybe there's an issue with the software used to determine the repairs needed to a home. So it's a trigger for someone in claims leadership to investigate further. There are also benefits around reserving, new product development, and then of course my personal area of focus is risk transfer. So whether it's benchmarking a reinsurance submission or completing an index-triggered risk transfer transaction, PCS can play a variety of roles in helping companies manage their risk and capital more effectively.
Okay, I think this is the first step for you. Make people understand exactly what you can do for their company, and then make them trust you.
Absolutely, and at the end of the day, we realize that if our service isn't helping a company with their loss ratio, their combined ratio, or the creation of shareholder value, then we're not doing anything for them. So why work with us? We're really committed to our clients and making sure that we're giving them the tools they need to make the most of their capital, give the most to their customers, and create as much success as possible for their shareholders.
What is the reinsurance and insurance industry thinking about ahead of the 1st January 2017 reinsurance renewal?
Well, to a certain extent, it's, plus ça change. Abundant capacity, soft markets, declining rates, the constant question, are we finally hitting the floor or not? And these are all valid, important issues, but to some extent, this conversation's been happening since I entered the industry.
Year after year.
Yeah, but there's also a lot of talk about emerging risks right now, and they're gaining momentum. Terror, for example, has become increasingly important because global reinsurers have seen terror creep into their natural catastrophe global programs, which is kind of interesting because it's inherently not natural, but it's still getting into NatCat programs. Kind of interesting phraseology.
Yes.
Beyond that, the accumulations that a lot of reinsurers have had to terror has increased as well. And when I was at the rendezvous in Monte Carlo last month, I heard from a number of people that right now they're aware that they have accumulations, they're comfortable. After 1/1, as this trend continues, there could be an increased need for standalone terror retrocessional cover. And that's why we're working on a global terror index right now. Early days of exploring it really is to provide the tools necessary to help reinsurers secure the retro they need for that standalone terror risk. The other hot topic in terms of emerging risk has been cyber. And what we're looking at right now is figuring out how to define cyber events, because right now the annual aggregate reinsurance treaties, companies are defining around cyber a lot. And that works if you're going to slip it into your global prop cat aggregates. But for a real disciplined solution that can carry the industry forward, we need improved event definition. And we're also evaluating for cyber the role of parametric versus industry loss. There are going to be roles for both going forward, especially in the retro market. But the challenge is going to be to determine which types of cover benefit from industry loss, and in which cases, especially for the extreme events, the cyber equivalent of Hurricane Andrew, would parametric be more effective because of the velocity of capital post-event?
Okay, and my last question for today is, what trends are you seeing in the global insurance-linked securities market?
Well, the most salient trend is the declining catastrophe bond issuance and the favoring of collateralized reinsurance. And these sorts of trends will fluctuate over time, and that's the sign of a healthy market. It means that cedents are getting more accustomed to the various tools that are available. The tools are evolving to meet their specific needs, and they're making choices based on their own books. Rather than choose one vehicle over another, I always think it's better to make the best plan for your book and execute it. What's also interesting is the kind of the oscillation of the ILW market over the past probably 3, 4, 5 years. What we're seeing is 1 year ILW activity will pick up. The next year it'll go down to almost nothing and back and forth. Now the driver behind a lot of this, I understand, is retrocessional transactions between ILS funds, and they're basically following certain trends in demand and pricing that allow them to take advantage of the ILW market at some points and then pull back from it at others.
There's a lot to understand about this subject. It's a new discussion, to say so.
Yeah, and it takes more than a few minutes, of course. But what's interesting is the industry as a whole has been investing in this discussion for 20 years. And the evolution of the risk transfer vehicles that we've seen and how they're using those tools demonstrates that that 20-year investment is providing very real capabilities to companies in managing their risk and capital.
Well, hopefully we'll be hearing more about PCS in Romania and about your services, and we'll have the opportunity to continue this chat about different subjects. Thank you very much for being here with us.
Thank you, and I'd welcome that opportunity.